German investor confidence plummets to 6-year low as U.S. trade war fears soar. The Research Institute indicator, which questioned 207 financial analysts on their expectations for the next 6 months, fell from -8.2 in May to 16.1 in June. This is its lowest level since September 2012 and was well wide of the -14 forecast in a survey by Reuters. World leaders and global economic institutions fear that protectionist policies imposed by U.S. President Donald Trump, particularly the imposition of stiff import tariffs on steel and aluminum last month, are casting a dark cloud over the world's economy. Germany is Europe's biggest exporter to the U.S., keeping more than 1 million of its nationals in employment, meaning Berlin is desperate to avoid a trade war with Washington. As President Kim Wambach said in a statement, the latest escalation in the trade dispute with the United States and fears about policies by the new Italian government that could destabilize the financial system are leaving their mark on the outlook for Germany. On top of this, German industry has been reporting worse than expected figures for exports, production and incoming orders for April. As a result, the economic outlook for the next 6 months has worsened considerably. Mr. Trump stunned U.S. allies at the G7 summit in Canada at the weekend when he backed out of a joint communiqué agreed by world leaders, including German Chancellor Angela Merkel, that made clear the need for free, fair and mutually beneficial trade, emphasizing the importance of fighting protectionism. His actions comes as the new coalition government formed in Italy earlier this month sparks concern for global economists, with the anti-establishment parties threatening to shake up the European Union. Economy Minister Giovanni Tria looked to reassure nervous markets at the weekend, claiming the new government has no intention of leaving single currency and plans to focus on cutting debt levels. He said, "The position of the government is clear and unanimous. There is no question of leaving the euro. The government is determined to prevent in any way the market conditions that would lead to an exit materializing. It's not just that we do not want to leave, we will act in such a way that the conditions do not get anywhere near to a position where they might challenge our presence in the euro." The survey was taken between May 28 and June 11, suggesting most respondents sent their assessment at a time when concerns about Italy were more prominent than the escalating trade fears with the U.S. Jennifer McEwen of Capital Economics wrote, "On the face of it, this index suggests that German growth will decelerate sharply and that recession is a significant risk. But note that its past relationship with GDP growth has been very weak and we would not draw any firm conclusions from a particular level."